Hello, welcome to a new video, and today I show you a divergence trading strategy with a multi-time frame approach. So this is a very highly effective divergence trading approach, and divergence in general are great tools if you know how to use them. I'm a huge fan of them, and they can be used in many different ways. So I use the 14 period RSI, which is the default, and I use a 50 period EMA on my charts. And divergences can tell you a lot about the price action, but when we look for divergences, you want to make sure that you only use divergences and you only look for divergences during a strong trending market. So you want to see that the market is moving below or above the moving average for a long time before you start looking for divergences. And then we can use the mean reverting nature of the Forex market to try to look for opportunities to trade the price back into the moving average. So here we are on the 4-hour chart, and we can see we have a divergence on our indicator. You can see when we connect the lows on the indicator, the indicator is always showing us higher highs or higher lows in this case, whereas the price action is always giving us lower lows. So the indicator and the price action, they're doing two different things. They are diverging. That's where the name is coming from. And then we want to go down to the lower time frame, to the 1 hour. I still keep the moving average from the higher time frames on the charts. So you can see this is a higher time frame moving average, the 4-hour EMA and the 50. So this is what we are using here. You can color it, but that is not really necessary actually. And this is the 50 period moving average from the higher time frames. And now you want to look for patterns, you want to look for breakouts, you want to look for any sign how you could trade this into the moving average. So let's look ahead and see what happens afterwards. So the price is just ranging a little bit. We can probably start drawing some type of trend line in here. Let's see, it doesn't line up fully yet. So this is not good enough. So we cannot find trading opportunities with this. But now you can see the market is trying, and it's starting to accept a trend line. And keep in mind, we need 3 touch points to confirm a trend line. And now you might be able to look at this as a breakout. So if the market breaks out above the previous highs and above the trend line, you could start trading this into the moving average. Keep in mind, this is our target from the higher time frames. So the market is not breaking above it, but it is confirming the trend line. We have 3 very nice touch points now off the trend line. So the first one, the second one, and the third one. And you can see the market is still hovering below it, confirming the trend line. But now a breakout above this would trigger a trade into the bullish side. Let's see, can we get that? And now we have our confirmed breakout. We have a retest pattern forming above the trend line. You can see it's hovering there. It's retesting the previous resistance as support now, which is great confluence. And now let's see, can we move it back into the moving average? You can see this is what happens afterwards. So a very nice, quick, easy in and out. You could also trade it with Fibonacci extensions or retracements. You can see if we draw the Fibonacci from here to here, we have a perfect 61.8 retracement. You could use that on the lower time frames even further to look for pullback opportunities, to time the entry even on the lower time frames if that's something that you want. And then we have a textbook move into the moving average. Another example, we use the 4-hour and then we go to the lower time frame. Again, you can see the market has been moving below the moving average for quite a while. And you can see the market is also showing us here a very nice divergence. We can see the lower highs on the price action, and we can see that the higher highs on the indicator. So again, we have a clear divergence on the price action. So let's go down to a lower time frame. And keep in mind, this is the higher time frame moving average, the 50 period. And here we already have some type of triangle or wedge pattern or whatever you want to call it. So here you could look for a breakout above the previous highs and then trade it back into the moving average. So in this case, you may have a higher potential reward compared to the previous one. So let's see what happens here. Market is still ranging, no breakout yet. It's moving back into the level, so very nice confirmation. It's not really there yet. We need to wait for a breakout, which happened afterwards. And then you can see what happens afterwards. The price is just moving higher. It's ranging a little bit. Keep in mind, the price never goes in one straight line to your target, but always move up and down in waves. And this is what we are seeing right here. So the trend or the trade still looks quite healthy. You can see it's moving higher along nicely, not quite into the moving average. So you can see the level, the moving average is coming down to meet the price action. And almost there, not quite. Let's see what happens. The market is turning a little bit, but eventually the price has moved back into the moving average. And this is actually what is inherent in the Forex market. The Forex market, when you look at it, it's a mean reverting market. So whereas in stocks, you have long trends that can last for years or decades, Forex is more like a mean reverting market, which means that the market is fluctuating around a mean price. The mean price is somewhere in the middle. Of course, you do have trends in the Forex market as well, but over the long term and on average, the market tends to fluctuate around the mean. And this is exactly what this trading approach is using. You trade it back into the moving average, which is the mean, obviously. And you could use it with many different time frames. 4 hour to 1 hour, you could use it on the daily and go all the way to the 1 hour, which means that on the daily, on the 1 hour, you then have much more potential for profits. So now let's take a look at the final example. Maybe again, the price has been trading above the moving average for a long time. It is trading well below, well above the moving average. So there's a lot of profit potential. We have a clear divergence here on the indicator, lower highs, higher lows, higher highs here on the price action. And now let's see on the 1 hour if we can find a way to time the entry again. Probably you'll be able to use a trend line, or you just look for a breakout into a new low. For now, we have neither, so there's no way to trade this right now. So let's give price some time to evolve. And now you could probably start looking for a breakout. You can see we have some previous support and resistance area in here. Let's move forward, and you can see what the price is doing. It's giving us, now we're having some type of breakout. So now would be probably a good time to go into a short, because now you see that you're breaking into a new low. This is according to Dow theory, that you want to get into a market when it's breaking into a new low. It's confirming the trend direction of higher highs and higher lows, or lower lows and lower highs in this case of a downtrend. The 50 period moving average from the 4 hour is here. So this would be the potential target. And let's see what happens afterwards. You can see it's ranging a little bit, but it's quite normal. The price rarely goes in one straight line to your target. It's always a wave function or a wave movement. And then you can see, okay, a few candles later, the price dipped into this moving average, and you would have been out of your trade. So again, when you time your entries on the lower time frames, don't just get into it because there's a divergence on the higher time frame. You need to wait for the market to break some type of horizontal level, a trend line, or something else, so that you can time your trades. It's really important that you wait for confirmation on the lower time frame so that you don't just blindly trade your divergences.